Xiaomi, a name you've seen on smartphones, smart devices, and now even electric vehicles. But is this tech giant a good investment in 2025? Let's break it all down. Founded by late June in 2010, Xiaomi went public in July 2018 on the Hong Kong Stock Exchange, ticker 01810. It is also listed in the U.S. OTC market under the ticker XIACY. Its business spans smartphones, smart home AIoT devices, internet services, and its newest venture, electric vehicles. Xiaomi runs on an ecosystem model, integrating hardware, software, and services. It's now a Fortune 500 company. Let's meet the founder. Lei Jun, born in December 1969 in Hubei, China, and now 55 years old. He's a serial entrepreneur who led Kingsoft, founded Joyo.com, later sold to Amazon, and launched Xiaomi in 2010. Today, he also chairs Shunwei Capital. Lei is known as a visionary tech leader with strong execution. Let's break down Xiaomi's 2024 businesses. Smartphones, 52%, their core product and among the global top 3. AIoT, 28%, covering smart devices and home appliances. Internet services, 9%, high margin, recurring income. Smart EVs, 9%, thanks to the 2024 launch of the SU7 sedan. Others, less than 1%. Xiaomi sells in over 100 countries. Revenue is split 58% from China and 42% from overseas, including Europe, India, Southeast Asia, Latin America, and the Middle East, all major growth markets. Let's look at key numbers as of July 29th, 2025 in Hong Kong dollar. Market cap, 1.44 trillion. Share price, 55.3. The stock has moved nearly 4 times from bottom to top. From 52-week low, 15.36, to 52-week high, 61.45. ROE, 14.87%. ROA, 4.58%. Xiaomi does not pay dividends. In 2024, Xiaomi's revenue surged to 365.9 billion yuan, marking a clear upward trend from previous years. The biggest growth driver was the launch of Xiaomi's first electric vehicle, the SU7 sedan. Xiaomi delivered an operating income of 23.02 billion yuan with a 6.29% operating margin, showing a clear upward trend and a strong recovery from the lows of 2022. Xiaomi achieved a net income of 23.66 billion yuan, with a net profit margin of 6.47% in 2024. It's a clear upward trend and a strong recovery from the lows seen in 2022. By the end of the 2024 annual report, Xiaomi had total assets of 403.2 billion renminbi and liabilities of 214.0 billion renminbi, giving a debt-to-asset ratio of 53.1%. This ratio has remained stable over the past 5 years. Remuneration. Out of 44,000 full-time staff, nearly half, over 21,000, are in R&D. Share-based compensation is common, with over 14,000 employees holding stock incentives. In 2024, total remuneration was up 21%. It's worth noting that 4 senior management members received remuneration between 10 to 30 million Hong Kong dollars. 3 received between 30 to 100 million Hong Kong dollars. And 1 individual received between 300 million to 400 million Hong Kong dollars. Major shareholders. Founder Lei Jun holds 23.3%, and co-founder Lin Bin owns 8.77%. However, Xiaomi continues to dilute shares for employee incentives and expansion, a key point for investors. Now let's talk valuation. P/E ratio, 42.34. Earning per share growth, 89.47%. PEG ratio, 0.49. This suggests growth is outpacing the valuation. PB ratio, 5.48. It is high, reflective of market confidence. Opportunities. Growth drivers. EV segment. More models and higher production. Premium phones, better margins. AI integration in devices and operating system. AIoT expansion and HyperOS platform. Global store expansion, aiming for 10,000 Mi stores worldwide. What are the risks? Low hardware margins make scale critical. Smartphone market is maturing. EV execution risk, entering a capital-heavy, competitive arena. Geopolitical issues like U.S. export controls or India app bans. Data privacy concerns with smart devices. So, what's the verdict? Xiaomi is a strong company with real long-term potential. But as an investor, my two key questions are, is my capital protected? How can I generate returns? No dividend means no passive income. Share dilution lowers shareholder value. Only gain is through stock price appreciation. But the valuation is high. The stock is priced for perfection. Unless there's a correction or strong catalyst, it might not be the best time to invest. Yet. Enjoyed this Xiaomi stock analysis? Smash that like button. Subscribe to Invest with CY. Which company should I analyze next? Let me know in the comments.